In the past several weeks, the Reddit group WallStreetBets has gained massive attention by sending heavily shorted stocks such as GameStop, AMC, and Bed Bath & Beyond and others up massively. Today, I'm going to discuss whether or not this is a long-term trend that can continue, what the long-term implications of this recent shift could be, and why this has potentially changed the world of investing forever. So stay tuned. Hello everybody, welcome back to The Contrarian. My name's Logan. I really like to talk about overall success in investing, as well as going against crowd thinking mentality in the world of investing. So if you like these kinds of topics, just consider subscribing if you want to hear more. Also, a brief disclaimer here is that none of this is to be taken as financial advice, and I'm also currently not a shareholder in any of these companies. So to begin with, I want to disclose that I am thinking about all these topics with the current facts that are available, and that I definitely could be proven wrong should further information come out that is currently not publicly available. But there is a lot to talk about that has happened in the last few weeks, but mainly just the last week. Firstly, stocks such as GameStop and AMC were boosted more than ever thought possible by these traders. And these traders, while a lot of them don't know what they are doing, are very intelligent as a group. There are at least several people within the WallStreetBets group who know a lot about the ins and outs of Wall Street. For example, they knew that by buying call options on these stocks, that the sellers of these option contracts would need to purchase the underlying shares in order to delta hedge against the contracts. So in other words, they knew that by purchasing these options, that this would force hedge funds, banks, or whoever is selling these options to purchase the underlying stocks. And then if enough traders were to purchase these call options, this would cause the stock price to rise simply due to how sellers of option premiums were managing their risk. And this strategy obviously worked very well for them. Not only did they force these stocks up, but they knew that in doing this to heavily shorted stocks, this would also force these hedge funds to cover their short positions. And a brief explanation about short selling is that it is essentially doing the reverse of buying low and selling high. Instead, you are selling at the current price and hoping to buy back again at a lower price. So you start out a short position by borrowing shares that are held by another investor or share owner entity of some kind. Then these shares are temporarily transferred to you, the short seller. The short seller immediately sells these shares at the current price and waits for them to fall to a lower price so that these shares can be repurchased for a more cheap price and then returned to the lender. And then you keep the difference between what you sold it for and what you bought it back for, and then there's always some borrowing fees involved. It is important to note that with short selling, the potential risk is unlimited because stocks can go up from where you sold them, theoretically unlimited. And because of this, it is a much more risky strategy than going long. When you buy a stock, for example, the most you can lose is 100% of what you put in. But when you go short, you could theoretically lose many multiples of what you put in. Now, an important distinction here is that with GameStop, over 100% of the shares that existed were sold short due to the short process playing out on the same shares multiple times. So in theory, if all the long-term investors held onto their shares and never sold, the price could have gone up basically to an unlimited value in the case of GameStop. So bottom line is that there are at least several people on this Reddit board who are very knowledgeable in how these strategies that the hedge funds have used could be used in reverse against them. And obviously the price of GameStop did not go to infinity, but it was going much higher than anyone thought possible beforehand, including myself. And of course, this process of buying calls and causing a short squeeze worked fine until regulators and brokerages stepped in and prevented the buying of these shares, which they did last week. And they still have limitations on how many shares of these stocks, people can buy. And the limits are only with regards to buying, not selling. So it could be said that these brokerages are trying to help out these institutions who need to cover their short positions. We don't know this, of course, but their actions certainly seem to indicate that. And of course, they have the ability to, for example, prevent the purchase of these stocks on margin in order to limit their own risk. But this has to, have brought a lot of backlash against these trading apps. And this is basically where we are right now. The Reddit board WallStreetBets was temporarily taken down off of Reddit last week during the heat of it, and now WallStreetBets is back up and running. So the question now remains, what happens from here? And this is difficult to answer, but I'll just give some broad guesses as to where this could potentially go. First off, although I love what has happened in terms of ordinary people having the ability to turn the tables on these hedge funds, I don't know that it will be allowed to continue. And I know this will bring a lot of criticism, but remember, I'm trying to be realistic in this situation. And remember last week, when these hedge funds were losing billions of dollars per day as these stocks went higher and higher, these brokerages and trading apps were able to step in and help them stop the bleeding. And even though this could have given some time for these hedge funds to cover their short positions, my guess is that it will take much longer than a few days for these funds to cover. Just the sheer volume necessary for that to happen was not there last week. I mean, imagine having to sort through the mess of shares that had been lent out to short seller number 1 and then sold to another long-term investor, and then that investor lent it out again to another short seller. Remember, with GameStop, over 100% of the shares were sold short. This is quite the storm that they will have to sort through, and in my opinion, it will take much longer than a few days or even a few weeks. And while this means that the stock price could go much higher in a normal free market, I suspect that if these institutions begin to lose much more money, we could see the brokerages step in again to limit, trading. That's just my guess. Unfortunately, that's just how the system works right now. And I will be pleasantly surprised if I'm wrong and all these hedge funds continue to be squeezed. Secondly, long term, I strongly believe that the valuations these companies are at right now are not sustainable. For example, even though I'm optimistic about the future of GameStop, mainly due to an upgrade in their business model to e-commerce, new consoles coming out, and a new management team, the fundamentals under the company, even in the most bullish case scenario, are nowhere near the current valuation that the company is at. So sadly, I do think that a lot of these traders who have bought in near the top are going to be stuck with some big losses, and they're going to try to catch a falling knife on the way down. There's simply no way that all of these people can get out at the top. It's going to play out that the smartest people will get out first, and then the slowest to realize that the crowd has abandoned this stock and gone on to the next hot thing will be stuck with massive losses. So long term, I actually think that this could end up hurting a lot more people than it helps. And sure, you have, a few people who become multimillionaires as a result of this, and there are usually people leading the rest. They're usually the people telling them where to go. But I just don't see this as being helpful, as a helpful strategy for the long term. You're going to have people who got really lucky, who made a lot of money in this, and they're going to be wise and not take these risks in the future, and then you're going to have a lot more people who think that this is a good strategy to have long term, and it's really not going to play out well if you keep doing this over and over. You're going to eventually end up losing. And something kind of similar to this was what the dot-com bubble ended up being back in the late 90s and 2000 when it ended up popping. It was very similar to how this is playing out right now with so many people who are very new to investing suddenly deciding to get into the market and play a very risky game. And actually just a couple of years ago, Tilray had a very similar squeeze as to what GameStop just went through. They went from around, I think, $10 or $20 a share up to around $300 a share, and then it crashed back down to about $20 now. So similarly, it was a very explosive rally and a short squeeze, but it crashed 95% from the highs that it reached. And my third takeaway from this is hopefully a bit more encouraging, and that is that I believe that this has really been a wake-up call for basically everybody, everyone from the hedge fund managers to all these Wall Street media, channels and everybody in between. Just that everyday people aren't helpless anymore against these too big to fail hedge funds and banks, and that collectively using the power of the internet and social media platforms, they have shown that it is possible to observe the strategies of these corrupt institutions and to use these strategies against them. And even though it might take a while for this to cause much change, I do think that this will eventually succeed. You know, sure, these brokerages might try to step in to prevent this from happening again, and the media might side with the hedge funds and paint this as some sort of disaster. But I do think that this will cause a lasting change for the better in the markets and for everyday people. I don't know when that'll happen, but I do think that will eventually happen. So I hope you enjoyed today's video. I wish I could say more, but there is still just so much that is unknown right now. You know, we still have yet to see how high some of these stocks could go. You know, GameStop, I think, has probably reached its high point and is on the way down. But other stocks like AMC and the current silver squeeze going on, we'll have to see how those play out. But let me know what you guys think of all this, and I hope to see you again.